This is Thursday morning, the 10th of September, and recording this about 7:30 a.m. Eastern Time. And rather than looking at any new pairs this morning, I want to go back over the last two pairs I've mentioned, Aussie, Japanese yen. We finally had this cross down on the 4-hour copy curve, as you can see over here on the far right panel. A lot of lines and drawings on this chart, but wanted to show you this before I start erasing some things. But we had that cross down, and we had a nice move down in this area, as you can see here. Where we came back to, I drew a fib line here from the push back up here, which is one way to kind of measure where to get into the trade and also how far it may go down, that sort of thing. And as you can see, we pulled back, we crossed to the 23% fib line, which I mentioned to the Forex paid members last night. Crossed to the 23, and where we came down last night was right at this 62% fib line. And as you can see, we bounced right on that line, on that pullback, and that line just coincidentally happened to be the Heikin-Ashi, the daily Heikin-Ashi fractal open line. As you can see, that green line right in there. So just a double line of support, and price bounced right off of there, and it's moved back up to a new higher high now. So I'm going to go ahead and take this and move this back up at this point. One of the things I've also noticed, just to point out quickly on this pair, is that you want to trade within this daily, even though this is still a 3-day overbought trend based on our heat map. And you can see on the daily chart also that price is still very bearish here, even though it may feel, if you're in this trade short and you didn't take profit, it would probably feel like it's really going up here. But the context is still very bearish for the pair. But one of the things I've noticed is that in the daily chart, if you look at CCI 11 here, we have a bullish divergence happening here that has been happening way back in here when we converted over. We had our first green candle, we had CCI 11 crossing up and showing bullish divergence here. So as long as that copy curve on the 4-hour chart trades within that frame, then our counter trend bias is still positive. Now the reason I say that is that when you do have these cross downs, you always have to manage your trades. You cannot assume that, okay, what's crossed back down, now it's going to go back down to a new low based on the 3-day trend. Well, no, not necessarily. So one of the things to keep an eye on is this CCI 11 bullish divergence that's still happening here on the Aussie Japanese yen. So that little pullback we had last night, well, it wasn't little, it was about 150 pips last night, and then it found support, moved back up. So still looking for overhead resistance, but this is one of the things I would keep my eye on, is this CCI 11, which is still overall bullish on the daily chart, even though we're still in a 3-day downtrend. It may sound confusing, but within any kind of a trade, any kind of a chart, you're going to have loops within loops. You're going to have trades that are trends and counter trends, and you can even have counter trends within a counter trend sort of thing, which is what happened last night. The other pair that I mentioned yesterday was US Canada. We did come back down to this little spike and found support right on that line, so that bullish trend continues higher so far. But as I mentioned in my original video of this one yesterday, there is a lot of churn in this area over here, as you can see. And of course this morning we have unemployment claims reports, so I'm sure that's going to be impacting that pair as well. Hope you have a great day of trading.